Hi everybody, welcome to another update on the gold forecaster index, the holy grail to predicting gold prices. In my last video I said that gold would go up, but at a slower pace. Let's see what happened. Monthly chart, we went from 2,600 to 2,700. So it's up, and I was right again, because the gold forecaster index is the holy grail and it predicts gold prices. So let's see what will happen this month. This is the data point. This is the gold forecast index. It's a leading index, and we have a massive increase, as you can see here. Massive increase in the gold forecast index. So this was August, this is September. I think gold is going to soar, and it doesn't matter if Kamala wins or Trump wins, gold is going higher. And you can actually see this here. Down, up. This looks similar, down and up. So if we look at this, then we are actually somewhere here. Okay, somewhere here, which means gold is going to go from here to here. And it's going to peak in about 1 to 2 years. So this here will go from here to here. That's 3,000 to 4,000 golds in 1 or 2 years from now. Okay, this looks extremely good. Other indicators. Okay, this is not that good. Misery index. We have seen unemployment rate come down. I still think that it can go up. So, and inflation is also going to go up. So that would push gold high, but we haven't seen it yet. Real output, not really that good. Still below zero. ETF flows are starting to bottom out. We are not going up yet. GLD levels are going up, and hopefully this will continue going higher so that gold can go to 3,000 and 4,000. COMEX is bottoming out. That's good. LBMA is also bottoming out. It's not dropping anymore. Then we have gold demand improving. It's not at all-time highs yet, but it is improving. And for silver, yeah, these are very nice candles for India. So there is silver demand. China demand is not that big. Imports, silver imports better than gold imports, apparently. Silver demand is improving from the ETF flows. You can see that in here as well. SLV is rising. So silver is probably going up. It has positive momentum. Also on the PSLV, holdings are rising. Let's go to China didn't buy any gold. Let's see this month. Reserve composition has held steady at 4.2%. Treasuries going down. So China is selling bonds. US mint sales improved for silver, gold not so much. Premiums still low but improving. Junk silver premiums improving a bit, but it needs to go much higher before it is bullish. Gold premiums are back to zero. So today it was almost back to zero. So that means that 2,750 is a neutral price for gold. But this can probably go up more back in the positive, and then I see gold probably go to 3,000. Silver is somewhere here, 8% premium, so this should drop to zero, and then silver will shoot higher to 35, 40. That's why we have Santa Cruz silver in the portfolio. Gold premiums are hovering around 4%. Not bad, but also not super. Open interest is rising. So this is the top, but here we are not at the top yet. So there's still some more momentum going on. There's more upside possible for gold to go to 3,000. This is also good. We have seen some swap covering. That's good. If this thing goes up, then most likely we are seeing bottoms. Okay, like these are bottoms. So I want to see this go up. Latest smart money positioning. It has weakened a bit, but we're still above 50, so that's still a positive momentum for gold. So we're still staying in gold. Swiss franc hovering in a positive. Real yields still need to go up. It's not up yet, so yeah, possibly if this trend changes, then gold will soar. Same here, real yields still need to go up. Seasonality is good. We are now in November, and gold will go up from November until February. So this is the perfect buy. I'm going to buy more gold miners like Serabi Gold. Same here. Gold typically goes up from November onwards. Silver the same. This is the bottom. Will go up until April. So just buy the miners. Easy. Let's look at this. Gold has still a lot of upside left. Here you can see we are still at the bottom. This still needs to rise to here with a massive spike coming in gold. Debt to GDP, debt is, I think it's already 36 trillion, and they will increase more the debt because the debt ceiling is almost there in January. So from January onwards, they cannot get into more debt. So they need to do it right now. They need to issue bonds right now, get more into debt because the debt ceiling is almost there. So you are going to see this spike upwards with bond yields rising. Gold will increase at least until the end of the year. And then with the debt ceiling, we will see what they will do, but I think they will just increase the debt ceiling. Near-term forward spread was somewhere here at 0.6 minus 0.65, still below zero, so still upside possible. Okay, so gold will go up when this thing goes back into the positive. So we're still in an upcycle. Rate hikes still need to come. Maybe less rate hikes, but we will see rate hikes next year and this year. But as you can see here, maybe less rate hikes because the 2-year yield is going back up. Not sure why, but we have seen some good data, yes, lately. Okay, it is what it is. But inflation is still very strong, so that's good for gold. Foreign gold deposits are rising, so central banks, I think they are still buying gold because otherwise the deposits wouldn't go up. So, yep, central banks are still buying it. The cash position at banks is stable currently. What else? Gold futures curve. You can see actually pretty clearly. So this was from September. Look at the slope. Then October, the slope increased. So this gap is bigger than this one. Go back. And now this is November. Look at it. The slope has even increased more. So here, small gap, here, bigger gap. So that means that the gold market is improving actually. Same with silver. This is the latest number, November. It's going up. But don't expect 50 silver. I think it's probably maximum at 40. Maybe 30, 37, 38 is possible, but don't think it's going to 50. Okay, and then the VIX. The VIX is on its way to go up. That's good for gold. And the fundamental value is still undervalued. If it's below zero, that means it's undervalued. This should go back to zero here, and then this will go up in the gold price. Okay, and let's take a look at some of the other indicators. Money supply, maybe. Is money supply still rising? Yes, it is rising. So that's good for gold. Central banks. We know that the Federal Reserve is still doing QT, so selling bonds instead of buying. So that's why bond yields are rising. They are not propping up the bond market yet. Let's see what they are doing now. As you can see, they are still selling. Okay, so this is red. They are selling the bonds. Eurozone is also selling, so they are all selling the bonds to the bagholders, and bond yields are going up. So avoid bonds at all costs unless you like pain and like to lose money. They are selling the bonds to the bagholders, as you can see here. Okay, so this is the reserves, the bank reserves. We are going to see a liquidity crisis at some point because here in 2025 there is a debt ceiling limit. So they cannot issue more debt anymore, which means this TGA account, where is it? US Treasury General Account will need to draw down. So this purple thing will go to zero at some point. Reverse repurchase agreements are also very low, so not a lot of leeway to get lower. So liquidity problems are coming next year. Okay, that's for the central bank balance sheet. Let's take a look at deficits. Yeah, we had an update on the deficit today. Let's see. And I also want capacity utilization. And maybe also let's take a look at unemployment. Okay, so deficits. This is the latest data. New low, new high in deficits. That's not good for the dollar because more deficits means that you need to print more money and the dollar will go down. Okay, this is pretty bad. This is a pretty bad number. So services are still positive, but look at this, the goods deficit is increasing. Yeah. This is really bad. The whole chart is pointing down. So yeah, deficits are going to increase, but that's good for gold. Import prices rising, export prices not rising. This is a gap that's going to increase deficits. Okay. The commodity prices have been going down a bit, so less inflation. This is still old data, I think, but yeah, GDP is growing. Look at this. Look at this red line that's cratering, and when you look from a long-term perspective, then you can see that the dollar follows the deficit. So as this thing goes lower, I think the dollar is going to roll over at some point, and that will be good for gold. Okay, let's look at some blog posts. There were not a lot of blog posts because I was on holiday. Okay, Charles Nenner, I already talked about that last video. Gold will rise for the next 3 years, so easy. Silver price targets. I think I talked about this as well. A lot of analysts say 40 silver. Liquidity vs gold price. Yeah, as the liquidity goes up, gold goes up. Okay, so trend is going up. Oh, I also put this here. So if you want to buy a miner, you need to choose, of course, the better jurisdictions. The problem is these are overvalued. Miners in these jurisdictions have a premium. I like to buy undervalued companies. So I need to choose something up here. So I have Colombia. I have Brazil, but Brazil is actually here. So you can see if you can find a good miner, cheap miner in Brazil, and this is a good jurisdiction, then that would be a win. And Serabi Gold is in Brazil. So easy buy for me. And then, yeah, Colombia, Brazil. What do we have as well? So most of these are Africa. So I try to avoid Africa. But yeah, I actually only Santa Cruz is in Bolivia. That's also not that good. Bolivia is here. So yeah, you need to choose. You choose the jurisdiction or you choose the undervaluation. Give and take. Okay, so gold miners is the place to be. And you can see that here the gold price is up, but the costs are not up. So this is a massive margin. Gold miners are making a lot of money. Then a bit about gold ETFs. Here you can see that the allocation to gold miners is very low still. This is 2024. So the retail is not buying gold yet, and they are also not buying gold miners yet. Compare this to 2011. Okay, here we have a mania. From 2008 to 2011, we had a mania, and gold went up a lot. Now there is no buying, so the whole bull market still needs to come. Okay. And then we have the gold ETF holdings that push gold higher. So these are the holdings, and you can see that the bull market has not started yet. Compare this to 2011, massive increase in ETF demand. Here we're actually going down. So this still needs to go up more, and gold will go to 3,000, 4,000. Okay. So conclusion. Conclusion is gold is the place to be. The gold forecaster index says that we will see a massive increase in gold. Actually, I still have these two tabs here. Let's take a look at capacity utilization. Where are we here? It's actually down. Well, this tells me that the economy is not doing that well. When it goes down, we see recessions coming. Same as here. Recessions, 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 and more recessions coming. And this actually takes me to the Brave Butters Kelly index, which we had an update as well. These guys, Brave Butters Kelly, have a leading index using 490 leading indicators, and they are telling us get out. So it is going down. The growth is slowing. It's not negative yet, but it looks like this trend is going to do something like this, going down and going negative. Okay. It will take a while, but I think stocks will also follow when this goes negative. It takes a year or two to follow through. Some unemployment data. So non-farm payrolls not that good, but unemployment rate actually went down. Here, looks like a topping pattern. So not looking that great for the economy. Jobs are not plentiful at this time. Jobs down. Here as well, job postings down to lowest levels. Job openings down, which normally should lead to higher unemployment rates. So let's see if that will happen, because this is weird. Unemployment rate actually went down. This should actually move up to 5%, 6%. Based on this chart, should go to 5%, maybe 6% by next year. Here as well, should move up to 5 to 6%. Okay. So back to the conclusion. A very good news this month. Gold will soar, and we just buy the gold miners because they are making a lot of money, and if gold goes up, they will make even more money. Okay, that was the update for this month, and I'll see you in the next one. Bye.